Hello, once again. John Flynn here from Flynn Real Estate, serving Southern Ontario, based out of the Niagara region. Thank you once again for tuning in. I do have some political follow up from last week. It does seem that these politicians are waking up to the reality of the Canadian housing market, but I'll get into that right after we go across the stats from across the country. Now, if your area is not in here, like always, it's because they haven't reported. It's the same theme for the areas that haven't reported almost every month, places like the East Coast and Winnipeg and whatnot. But anyway, most of the major cities and regions are in here, so let's get into them. Starting in Ontario for the month over month price changes, and most places saw price declines for the month of July, some with pretty big price declines and others not so much. Actually, there's a few that had price increases, such as Simcoe and District, Woodstock, Ingersoll, Ottawa, and the Lakelands and Muskoka area. But the rest of Ontario have had pretty decent size losses. And there was two that I posted on my Twitter here. It was Cambridge. They were at about 9.3 or 9.5 or something percent loss. Now that was an $81,000 loss, which is $20,000 per week. And then Toronto, they had a $85,000 loss in July, which equates to about $2,700 a day. So that's a pretty big loss. It's very volatile, the market right now. We have lots of increases and decreases month to month. So if you know anything about volatility, it's because usually because of fear and uncertainty. Anyway, let's move on to the rest of Canada month over month. Up at the top here, we had Fraser Valley. They had an 8.5% loss month over month from June to July. Now, that equates to a $94,000 drop on the average house in 1 month. Now, this one was $3,000 a day. Places in Fraser Valley have literally lost $3,000 a day in value or in price. The other places that were negative were Saskatchewan, Calgary, which had been doing very well, but they did have small losses month over month. Edmonton, just a little bit. And Quebec, just over about 1% increase from June to July. Montreal, 2.5% or so. And Victoria, BC, had the biggest gains. They're around 7% increase from the previous month. Now, looking at a recap of the percent change from the peak. So whenever the peak was, for most places, it was from February last year. Leading the way, Northumberland Hills. They had the biggest decline, 25, 26% or so. Then North Bay, Grey Bruce, Owen Sound, Cambridge. A lot of the smaller or not so big outlying areas seem to be pretty volatile with the price swings. And for the bigger areas, then you get into Durham region. Brantford's not so big, but it's still a good medium size. Guelph, Kitchener, Waterloo, a lot of people in that 20% club now. Almost just over or just under half the areas in Ontario are back in that 20% club of meaning 20% losses from the peak. And of course, as you go down the list there, the Ottawa and the Lakelands, Muskoka and Bracebridge, etc., have fared the best with the least amount of losses from the peak. 10% in Ottawa, or just under 10%, and around 8%, 7 to 8% in the Lakelands. Continuing throughout the rest of the country, of course, Fraser Valley, they have the biggest losses everywhere outside of Ontario, well over 20%. And the rest, Victoria, Greater Vancouver, Saskatchewan, Province of Quebec, Edmonton, Calgary, have all less than 5% or around 5% or less, with Montreal faring the best from the peak, and they're only around 2% losses from the peak. Translating those losses into dollar amounts, Durham region with the biggest dollar losses. They're about $275,000 from the peak, followed by Southern Georgian Bay, Oakville, Milton, Cambridge. They're pretty big losses for Cambridge, considering the price points. Peel, Northumberland Hills, Guelph, York. So you see a lot of the bigger cities, of course, bigger price points, losing a lot more money. And you can work your way down there. Again, Lakelands and Ottawa faring the best with about $75,000 losses from the peak. And of course, in the rest of the country, it is Fraser Valley, $275,000, probably closer to $280,000 by the looks of it. Victoria, everywhere else, Greater Vancouver, they're not even 100,000, which is pretty good for them considering their price points. And of course, Quebec, Calgary, Saskatchewan, Edmonton, Montreal, little to gain, little to lose. They are very close to their peaks from last year. Actually, some of them are from this year. Edmonton, I think Calgary are from this year, their peaks, whereas Montreal and province of Quebec were from last year. And a quick look at the inventory here. The new listings, it's split almost 50-50. Some places have more year over year. Some places have less. Of course, some of the smaller areas have pretty big swings. Northumberland Hills, Bancroft area, like down big time compared with last year. But again, there's very few or very small data set there. So it does swing their numbers a lot. And same with the rest of the country. It's mixed for inventory. Some places are up and some places are down. Of course, Montreal, Edmonton, Quebec, Saskatchewan are down year over year for new listings. In Calgary, Victoria, Greater Vancouver, and Fraser Valley is up. So you can take a look there at Fraser Valley. They have a lot more inventory, almost 20% more than they did last July. They had more sales too, which we will see in a minute, but lots more new listings compared with last year. Now moving on to the sales, most places in Ontario have more sales than they did last July. July was pretty bad for sales. The big shock of the interest rate hikes, I think we had the 1% hike by then. But you can see most places have significantly more sales than they did last year, besides a few of the smaller outlying areas at the top. And everywhere, including the Fraser Valley. So the Fraser Valley, they had almost 20% more new listings than last July, but look at their sales. Their sales are up 37% or so since last year, but it, of course, didn't affect the prices. The prices were still down in July. So that was a pretty interesting statistic there when looking at it. Okay, so I wanted to touch on the video I shared from last week. It was our Prime Minister saying, to be blunt, housing is not a primary federal responsibility. And of course, I think a lot of people would argue that that is. But then that was 2 weeks ago, actually, when that news or press conference in Hamilton happened where he made that statement. And last week, I found it odd that a lot of the political parties, the Conservatives are always putting stuff out about housing and promoting housing, but the Liberals and the NDP, they were kind of doing some damage control, I think, not the NDP, but the Liberal Party, because here is a tweet from the Liberal Party last week. And it's not just this tweet or not just what it's saying, but it's the specifics within it. And I'll get to that in a second. Finding an affordable place to live has become increasingly difficult for Canadians, and that's why we're investing to build more homes faster. Our Liberal plan is building more homes, helping first-time homebuyers, and cracking down on speculation. And of course, you can see their Prime Minister with his hard hat on, looking like he's ready to build some homes with some construction workers. So what really got me in this tweet was the cracking down on speculation part. I've been saying this for years. If you watch my videos, at least for a year and a half on my videos, but I've been saying this longer off camera. Speculation is the main reason for these runaway prices in Canada. Of course, they're fueled by, low interest rates and whatnot, but what really put them over the top was the speculative investing and whatnot. Anyway, I want to move to the next tweet. Again, this was in the same week, just a few days ago, from the assistant there, Jagmeet Singh, Trudeau's assistant. And Jagmeet says, does the housing market feel rigged to you? That's because it is. For years, Liberal and Conservative governments have sided with corporate investors, buying up housing in your community and driving up costs instead of helping you. It's time to put an end to that. You and your family deserve an affordable place to live. I'm fighting to create a housing market that works for you, not for ultra-rich investors. Stand with me. So both of these political parties or people have come out attacking investors, blaming them for driving up the prices. And of course, Jagmeet Singh talks about the corporations, and it's not the big corporations like you'd be led to believe. It's not the BlackRocks and stuff. Most of the corporations I see selling homes are just small corporations formed by individuals for a strategic way of buying homes, right? They put in a corporate name. They can, share it amongst family members or friends. It's just a lot easier to do it through a corporation, and there's a lot of benefits to it. So two things I'm going to take away from these recent tweets. So the first one would be, are the Liberal Party along with their alliance with the NDP, are they like planning to come up with some punishment to punish investors if they buy homes anymore, like the foreign buyer tax and things like that? And the second thing is they're pretty much both on board with the reason that speculative investing and speculators are the reason that our house prices have run away. And of course, it's because they've had the environment to do it in, low interest rates, the wealth effect. They get to leverage their own equity to buy other things where the first-time buyers really have nothing, no advantage, I should say, where they have to save up the money. They're saving up their money. And of course, all these speculators, they already have the money in equity, and they will just keep driving up the prices. So I just want to share a few charts from this week that I have posted that kind of proves that, the rental market and the speculative market has increased significantly over the last decade. So here's the first one. This was from the ITSO, the 20 boards surrounding the GTA. I didn't do the TREB at this point, but I'm sure it looks the same or very similar. And you can see the active listings from 2013. They were around, 500 or 750 or so to 1,000. And of course, they spiked up to 2,700 or 2,800 at one point, and they're sitting well over 2,000 right now. So that's, 2.5 to 4 times, depending on the month or the time of the year, that they were 10 years ago, or even 7 or 6 years ago. When you're looking at the sales, these are leases, not sales, but they consider them sales when they're reporting them. But this is lease sales. You can see we went from 250 to 500, depending on the time of year prior to 2017. And now we're at between 1,000 and 1,500, depending on the time of year. So there's a significant increase, like 3-4 times, depending on the month, for the number of leases that have happened on MLS. It's not more people are renting their basement apartments. Somebody said that, well, maybe more people are just renting their basement apartments. No, this is from investors buying properties and renting them out after they've closed on them. So now a couple more charts to back up this theory, and it's not really a theory, I've proven it before, but just to back up the statement. Agents' percent of the deals that they're doing are going towards leasing more than they used to go towards sales. And let me show you here what I mean. So this is, again, the ITSO, the percent of lease transaction versus all residential transactions. So for, 100 sales, they were doing, 4.6 leases, or 4.6% back in 2013. And you can see that is now 18.5 in 2023 so far. It was 14.1% last year. So agents are doing a lot more leasing as a share of their total number of deals than they used to 5 or 10 years ago. And this trend is also true in Toronto. They've gone up double. So they've gone from 24% in 2013 all the way up to 2016. They were at 26%. And now they're almost half of the deals that they do are leases. It's 45.7%. So this data, again, backs up the volume of leasing that's going on out there compared to 5 or 10 years ago. Anyway, let me know, as always, what you think in the comments. And until next week, I'll see you then.